All right, so I want to start off with a market update. This is our market update for April 22nd through 26th, 2024. We're going to talk about stocks, and I'm going to cover SPY. We're going to talk about bonds. I'm going to cover TLT. We're going to talk about commodities. I want to go into oil, and I want to go into gold, because one of these has a pattern, and one of them has just been a breakout until today. It was a bit of a breakdown, but we'll see where it is. And I also want to, because we have a third of the S&P 500 stocks reporting earnings this week, I thought that we would go into a look at the Mag7. And I've got a summary for you on the Mag7 as well. So let's go ahead and get started. I'm taking charts right out of Tom's Option Tools, and we're going to look at kind of a then and now with some of these. So a then and now takes us to the beginning of April. At the beginning of April, we saw the SPY lows around 410, highs up here around just above 520. And we had retracement levels at 480, 466, and 453. That's the 38, 50, and 62% retracement levels. Let's fast forward to today, and you can see exactly what's happened. All of this is pretty much set in stone. What I did this time was I took those lows and those most recent highs, and you can see now we've changed our support just a bit. 489 is the first level of, the 50% retracement level, which we are very close to here on SPY. You also have channel support. Now, I added channels on here, and you can see these channels which show that we're still in an uptrend. That's why I have the S&P 500 up. All right, because if you look at the long-term trend is up, you've got intermediate pausing, and you've got the downward trend. You got a small trend going down because for the last few weeks, we have been in a downtrend, and we have taken back 38% of that move that happened back in November. All right. Also, take a look at 200-day moving average. That's all the way down here. You can see a 200-day moving average support is still somewhere around 200 or 460. So there's a good ways to go before we get to the 200-day moving average. I want to caution everybody that those of you that look at the 50-day moving average, it's right here, and we are here. So we have pulled below in the last week the 50-day moving average. So what does this tell me? As right off the bat, I see some really interesting support that's happening right at these levels today. Question is, will it hold? For that, I want to look at some other charts. The bond market. This was what I shared with you back at the beginning of the month. At the beginning of the month, we had bonds on an uptrend from just above 82 to around 100.5. Then we started seeing lower highs and lower lows. We dipped in under the 50% retracement level. And at the time, my thoughts were we could come down into that 89.55 area, and we need to hold that to hold the uptrend. Well, fast forward to today, and you can see that the bond trend is now down. All right. The reason it's down is even though we see the fib levels going from low to high, the fact that we breached 89.55 and we came back up and it became not support, but resistance. This tells me that the trend probabilities are that the bond market continues to trek lower. Now, think outside of technicals for a moment. Fundamentally, what has to happen in order for bond prices to drop and yields to continue to rise? We'll have to see, again, higher employment rates, lower unemployment than expected, and of course, inflation to remain at or above 3%. That's going to push the bond market down. That's going to push us back to potentially highs that, if you go back here, this was what caused us to have that rate hike and apparently our 5.25% returns in the bond market. Well, we're still at that 5.25% level, and yet we're here. In order for those levels to drop, we're going to need to get at and above 93.74. We stay where we are or go lower, there's a huge possibility that we already know rate cuts are more than likely off the table for the summer. And now we're all looking to the fall. Are we going to see rate cuts in September? If this chart continues to drop, the answer is no. So when I go back to the stock market, again, stock market was telling me there's a great support bounce here, but that's only if uh, the Fibonacci's, the trend levels, the moving average levels in the bond market are all wrong. And I don't believe that they are. All right, USO. So USO and oil as a whole, we've talked about this several times that we are in a bullish pattern, and we have been in a bullish pattern since around middle of February. That's actually proven to be very well. And I've done well on my oil ETFs. EQT was the latest one that I've gotten into. I actually rolled that because it ended up becoming worthless. And I'm a great seller of premium on stuff that has high implied volatility. And it did at the time. I rolled it once again, and it too has proven to be very well. So we'll see where that goes into May. I expect, and take a look at today's chart, and you can see those trend levels are up. We have pulled back. We have had a pullback, but the trend is still up. The FIBO levels, Fibonacci levels, still remain the same. Moving average trends are up. We're above the 50 and 200-day moving averages, and we are still seasonally bullish into the month of July. So I have to put all of that together and say, regardless of what the stock market does, I do believe that oil is going to stay above the stock market. Retracement levels on gold. So GLD, last time we talked, it was the beginning of the month. We were trading above 215, and this was outside of anything we expected. So we're looking at levels. We got 38% retracement 202, 50 197, 62 is 192. Those were big moves back. And what has happened since then? So again, this is the beginning of April. Look what ended up happening. We went all the way to near 225 last week. But this area right here held, this 222 resistance held for the last 6 days, 6 trading days, as support continued to climb. Now, when I looked at this last week, I'm looking at this thinking, we're going to have a breakout. This is good. This looks like a bullish pennant that was happening. We got our breakout. It's just not the way that I expected it. The breakout became a breakdown. A couple things I want to show you here. The fib levels, I have updated them to the 185 level. So that pushes the 38, 50, and 61s up a bit. 38% retracement levels, 207.15. We're trading around 215 right now. That maybe high 214, low 215 area right now. But trend levels are still up. So FIBO levels still up. Moving average trends, both the 50 and 200 day, still up. But what's interesting is, if you go back and you look at gold, every time we had a top in implied volatility on an inside day, we saw a pullback. And we saw that top happen right here. What ended up happening? We stayed inside. In this case, it was a 2-day range. We stayed inside that 2-day range for days before it dropped off. But look at vol. Vol dropped off ahead of price. Volatility tops typically precede price when you get a major spike in vol in something like a commodity such as gold. All right. So that's stocks, bonds, currencies, commodities. Let's shift to our friends at the Magnificent Seven. One look at Tesla. What I did was I reset these by earnings date. So Tesla's the first one. Well, actually, last week we saw Netflix, but I'm looking at Mag7. And Mag7, you'll see Tesla's our starting stock. Its trend level is way down. I mean, we're down. This thing is down almost 50% from where it was not that long ago, right? We see Tesla down at around 140, and at the height, this thing was trading near. It was close to 300, but beginning of the year, it was trading around 240. We're at 140 now. It's below all the Fibonacci levels. In fact, the whole thing flip-flopped. The fib levels have reversed. We've gone from, typically we see low to high and pullback. This went low to high, pullback, and here's our pullback, and then here it is again. And what happened was this support got hit, and then it became resistance. We came back up to that 179.88 resistance once, twice, and then a super fail as it moves down to new lows. So you've got a stock where the only thing that's going up in it right now is implied volatility. Look at the moonshot in implied volatility. It went from a 40 back here at the end of February, beginning of March. And in just 2 months, we've doubled the implied vol. Now, part of the reason that vol is so high, I mean, you could name a number of things. I would say that if you look at China and you look at competition and you look at what's happened, I'm calling it the EV fail. The EV fail where all of a sudden electric vehicles are just not trending and going out the door like they used to. But the big thing is it's got earnings in a day. It's got earnings on the 23rd. So that's also pushing that vol up. So if you see, I mean, this is 2 days of vol going from the low 70s to the mid 80s. And by the time we get to tomorrow, because this is all aftermarket close, I expect the volatility level on Tesla to be even higher. All right, to be even higher. So that's Tesla. Is it oversold? IV might say it is. But we'll know soon enough. Okay, complete flip-flop to the next one, which is Meta. And I'll go rather quickly on this. As you can see, Meta's trend is up. The volatility is also up. Look at the vol from where it is now. Now, this is our earnings are coming out on the 24th after market close. And you can see right now the vol is around 72. The high on the vol last quarter was in the 60s. So it's already higher now than it was then. I would say that a lot of the reason it's higher is because of the pullbacks that we've seen in the overall market. And Meta is also along for that pullback ride as well. Fibonacci levels. We're you got support here at 458.50. We're not really that close to it as of right now. It is above the 200-day, which is down here in the threes, call it 360, but it is bearish. It is crossed below, and it did that on Friday. And as of this snapshot, it's still below the 50-day moving average. Of course, we have earnings coming out this week. Next, Google. Google's a trend up, although it looks really funny because it had almost a high at the last earnings cycle, and you can see the top and implied volatility here. Google then dropped and came all the way down into the low 130s before around the beginning of March started marching upward and got as high as 159.41 on a close before getting a little pullback. But it's looking really good. It's one of the best bulls right now when you take a look at the Mag7. It's above its 50 and 200-day moving averages. It also has earnings coming out after market close on April 25th. High implied volatility. Next, Microsoft. So Microsoft, when you look at Microsoft, you see what happened in his last earnings report. I mean, we got up and about 2 weeks later, we're trading up around 420. And then we got as high as 429. But that was back a month ago. It's been a month since Microsoft has seen new highs. It's moved sideways during pretty much the month of April, and then over the last week has dropped out of the 400s and come down just below 400. Right now it's trading right around 400. The 50% retracement level is 398.56. It is above the 200-day, but it's below the 50-day. Earnings also due out on the 25th. Now, we move into the following Mag7 stocks that have earnings after this week. Amazon's one of them. Amazon's trend is up. It's got a 5.0 pullback at 172. It's not there yet, but that's the first area. So that tells me this is more of a bullish move like Google. All right, so it's sitting on its 50-day right now. Actually, it's just a bit below its 50-day, but well above the 200-day. Earnings are not due out until next week. That's on the 30th after market close. All right. Apple. So we've got Apple that has earnings in 10 days. It's down 7.5% off its year-to-date highs. So you can see it, like Tesla, is the other one that's trading down here near its lows for the year. All right. The 5.0 levels have reversed. That means that on a trend down, we see resistance levels now, 176, 180, 183.65. Right now, just bouncing off its lows for the year. 50 and 200-day moving averages, both bearish. Of course, its earnings come out on the 2nd of May after market close. And finally, to finish this up, NVIDIA. So NVIDIA has been the darling of technology as this thing got above $950 a share before retreating. And over the last oh gosh, you got to go back to 3 to 4 weeks, almost a month now. We've gone from the 950 level. We bounced off of 770.46. We bounced off of that today. The trend, well, the trend is still up. All right. But take a look at the vol. All right. I got this wrong. NVIDIA trend is supposed to be up, and the vol, not the volume, the volatility is actually down. Look at that vol down here from where it was prior to earnings. There's a reason for that. And that's because its earnings are not for another 30 days. They're not going to announce until the 22nd of May after market close. So there's plenty of time for that now, for this line to start moving north, but not right now. Right? This is another stock that is finding support or trying to find support at 38% retracement level, is below the 50-day moving average, but above the 200-day moving average. So when you add it all up, here's what we got. On our magnificent earnings summary, 5 of the 7 stocks I talked about are trending higher. Apple and Tesla are the 2 that are on year-to-date lows. 5 of the 7 are above 200-day moving averages, but only Google is well above its 50-day moving average. NVIDIA has the lowest implied volatility on a range basis. That's because it doesn't announce earnings for several weeks now. Tesla, however, has the highest implied volatility on a range basis. That's because of earnings, competition, and just the overall EV market has pushed that extremely high.